here are your top 5 stocks to watch out for this Monday morning. Well, it's a whole host of a mix of results as well as some stocks which are in the news. So let's begin then with with Union Bank first up, which came out with its quarterly numbers. Well, on the face of it, the PAT number looked encouraging at 332 crore rupees for Q1. This is versus 224 crore rupees on a year-on-year basis. You had the NII growth as well, which came in healthy at 6,403 crore rupees versus 2,518 crores. The provisions this time around remain slightly elevated at around 3,555 crores versus about 3,501 crores on a QOQ basis. The gross NPAs came in at 14.95% versus 14.15%, with net NPAs at 4.97% versus 5.49%, which means they were fairly stable on a QOQ basis. Moving on to another set of numbers, and then watch out for Oil India in today's trading session, as the revenue from operations came in significantly lower at 1,749 crore rupees for the quarter gone by versus about 3,380 crores. The profits dwindled to just about 26 crores versus 847 crore rupees. There was an exceptional item in Q1 of about 93 crores that was incurred, and that was on account of the control in the blowout in Bagjan oil field. The operational performance as well was hit very significantly to 181 crores versus 1,353 crore rupees, with margins coming in at a meager 10.4% versus 40% YOY. CLSA maintains a sell with a target at 60, saying the bottom line has disappointed. There was a beat in EBITDA, but one-offs led to a net loss in Q1. They've raised the EPS forecast but retain a sell rating. Meantime, watch out for Indiabulls Housing as well, which came out with its quarterly numbers. You had the profits which dropped about 65%. The company said that the loan book is growing though from here on, because they're seeing a phase of reduction in the loan book in AUM. So 272 crore PAT versus 790 crores. Revenue from operations dropped nearly 35% to 2,574 crore rupees. And the company has said that the COVID pandemic has significantly impacted the numbers, including erosion of the asset values of the collateral that has been held by their individual segments. ICICI Lombard's in focus. CLSA has a buy rating with a target price at 1560. They're saying that the Bharti AXA merger is a near-term EPS dilutive. They see significant headroom for cost optimization, and the rationale for merger is strong. Bharti AXA is in the motor segment, and the scale and energy is going to help ICICI Lombard to optimize their expense ratio in the future. PVR, Ajay Bijli, has gone ahead and said that they're hopeful of a resurgence due to the pandemic once the government does allow cinema halls to reopen. He says that PVR will diversify and not rely on a single revenue stream. But he's optimistic that expansion remains on track. He said that it will not change the movie-going habits of people, and they will continue to come to theatres. He has said that people are not going to be hardwired to stay at home, and footfalls will be back to pre-COVID levels soon. They already are right now in some of the Delhi malls. The revenues are down to zero, but they are tackling the disease, which he says will take top priority. So they are going to go ahead. They are talking about that drive-in cinema that the company is looking at. They are ready to open their theatres. They will be following SOPs and all of the safety procedures.